I was thinking about what Colonel Gaddafi from Libya was attempting to do, which was have his oil trade in Libya be traded with oil for golden dinars, basically to put oil on a gold standard. And we do know that was one of what his main reasons, really, the United States or NATO, whatever, went against Colonel Gaddafi. I just wanted to run the numbers a little bit and see where that would come out, where oil would come out in relationship to gold, if this type of structure could work today. In global production of oil, we have 88 million barrels per day. That's worldwide production of oil, of which Libya, as a side note, had 1.6 million barrels, or 2% of the global production. So 88 million barrels per day times 365 days a year, assuming $100 a barrel for oil, which today it's about 99 something as we speak. That would give us $3.2 trillion that would have to be paid for oil, all global oil production on a yearly basis. Now we take the gold that is mined per year. It's about 25,000 metric tons, and precious metals are measured in metric tons. There's 1,000 kilograms in a metric ton, or 2,200 pounds, because there's 2.2 pounds to a kilogram, okay? Using troy ounces, of course, 32,150 troy ounces times 25,000 metric tons of gold produced a year gives us $1.4 trillion, assuming a spot price of $1,800 an ounce for gold. So if you took all the gold that's produced in a year at the current levels, assuming $1,800 spot price, which it isn't even that high today, it would not even pay for half the oil out there that's produced in the world. So it doesn't show you exactly, if you're going to use this type of scheme or a gold standard to monetize gold, that gold would have to go up in many, many, many multiples along with silver, if silver was semi-monetized or monetized, in order to just pay for one truly essential commodity. You're not talking about everything else that's out there, and I'm just talking about probably the most vital commodity that's out there is oil. Also food, also lumber, natural gas, electronics, other consumer goods, real estate, exchanging for real estate. Gold would probably have to be some astronomical number, like a minimum of $20,000 an ounce, or maybe $50,000 an ounce. That is the reality behind it. So what I'm looking at today, we're looking at, and I'm not knocking technical analysis. I think the technical analysis is actually going to be very, very valid in the future. Right now, it almost looks like, to most people, it doesn't work, because you're looking at these slam downs, and the fundamentals are the opposite of what is going on in some of the in the markets, you would almost think. But I think the technical analysis is going to reassert itself. But I want to also look at, if we added all the silver mining production in the world and added it to this number, would it be enough just to pay for oil? And looking at silver demand, we have 879 million ounces in 2010, which demand is actually higher in 2011. But most of the demand is from industrial uses in jewelry, and even a little bit from photography, but there's not much actually available for investment or even for coins. Even though those areas are coming on stronger, there isn't that much available even for investment, in other words, to use as money. But assume that the entire world silver production for 2010, 736 million ounces, is available in its entirety to pay for oil alone, just oil. So figure 736 million ounces. You have at $35 spot price per ounce, you have $25.75 billion, not trillion, billion, big difference. So if you added $25 billion to this, you still would not even have $1.5 trillion. You would still be below $1.5 trillion. Now, oil prices are actually forecast in the next 6 months to exceed $150 a barrel. So this number could easily be $4.8 trillion or more. Then you would not even have enough to pay for 30% of the oil out there. So tell me, where does the price of gold and silver have to go when currencies start collapsing and there's debt defaults in governments throughout the world, which is a no-brainer calculation that's going to happen. I want to look at this SLV chart real briefly. And I know a lot of people who follow silver listen to Brother John F. and Endless Mountain on their channels because they have excellent channels on silver. And I decided to do a couple more videos on this because I see some of the channels out there, I don't like the information that's coming out of it, to tell you the truth. And usually it's the channels that have like 5 million viewers or whatever the heck it is, and I'm listening to this guy and he's not telling me nothing, to tell you the truth. Waste of time. But Endless Mountain actually had a very good when he's trend line, he was basically, this was it, in late August 2010 when it started out, when silver started on a nice bull run, and it ended in early 2011, and then the trend line was broken. But then it reasserted itself, and there was another trend line, and it was going up in a more aggressive manner, silver, all the way up to the end of April, and then they had 5 margin rate increases, and then it broke. But it was interesting that it reasserted itself, the silver price, and it touched this trend line again. Now, I think a lot of people are getting discouraged, and this is the psychological game they're playing with people. They want people out of this market. Because if you look at this without knowing what it is, you wouldn't think it's such a great thing to invest in just looking at this. So some people think, the charts don't work, or whatever. But I think what's going to happen, just cut right to the chase, that even this trend line, it may surprise people that maybe this trend line, as radical as it seems, may reassert itself at one point in time. Just figuring, that calculation I did with paying for oil with silver and gold, where they would have to be. They'd have to be many, many times higher just to pay for some essential elements in the world. So what's going to happen when there's a global debt crisis and currencies become worthless? What's going to happen with this metal when it actually has to be exchanged for goods for real? It's going to have to go up in many, many, many multiples. So we looked, and there's one other thing I want to point out too. I know Brother John F. pointed out about this, and this is kind of like my common sense. I always look at it too. When you see a lot of volume jumping into something, watch. What does that mean? There was a lot of volume when the silver price dropped on the SLV, and this is volume on the SLV. We're not talking about physical silver volume. Also, a lot of volume that dropped the second time, when it dropped the second time in September, but not as much volume in the SLV. But what does that tell me? It tells me that maybe the average investor is kind of wising up about pouring money into ETFs, because we do know that the physical silver buying at late September, when the price dropped to below 30, was much, much stronger than it was even in the beginning of May when we had this last price drop. So I think the average investor is starting to wake up, and actually that includes the most wealthy investors, because the most wealthy investors are, many of them are not stupid in any respect, and they do hold a lot of things of assets that are not really, in other words, when Forbes goes around and asks, looks up what people's net worth is, I almost look at that as a joke, because there's so many things that people have that will be not displayed on their financials. I mean, they can have rare arts, they can have, emeralds, diamonds, there's all kinds of stuff out there, and I've seen some of it, and it would really freak you out what people could possibly have. So a lot of times You know, the smartest people are grabbing the silver and the gold, and there isn't. They got so much damn money, they don't even know what the hell to do with it. So they're just grabbing this stuff cheap right now. But what you might see when we actually have sovereign debt crisis where governments can't pay for things and currencies get inflated all the way up, and it's going to happen in one country or one area of the world. I don't know where it's going to happen first because, like I said, I think there's a competition between the major global centers. There's a competition between the United States and Europe and Russia and China, and it goes on all the time. And I don't think the elitists really know who's going to win. One area you might see a sudden impact on the silver prices is also through revaluation of the Chinese money. Now this happened in 1994. This area circled in red. Now I didn't look at how it affected precious metals or anything, but I think because it probably wouldn't matter what it did to precious metals back then. But what I think with the landscape today, China may revalue its currency. They're under pressure from the United States to do it, to appreciate their currency, but they're also under pressure from their own people because they're experiencing a lot of food inflation. So sometimes, you know, an outside event like this, unexpected, because nobody's going to know when this is going to happen. Everybody's looking at Europe right now and all this stuff. This may be this will definitely cause the American currency, the US dollar, to go down if they appreciate their currency. But it could also affect the metals greatly. And sometimes it takes a life of its own. Like maybe this was taking a life of its own when it was moving up like this. You know, there was some extra speculation in there, even though silver has to go up a hell of a lot more fundamentally. But that could be the start or the little spark that starts driving up the metals again. But as I stated, if you took all the silver in the production in the world and all the gold production in the world, it could not even pay for half the oil production in the world. And it's, you know, you're not talking about derivatives and off-balance sheet memoranda items, different things, because there's a lot of that stuff out there. You're talking about an essential commodity. So what happens when you have to use this as a medium of exchange? It's definitely going to have to go up to many, many multiples. So I was always curious to think, you know, maybe this trend line may be asserted again, and it's people going to be looking, this was just a temporary blip in the market, you know, very temporary. So do not sell off at $50 or $75. That might be a smart thing to do on some of the ETFs. If you have ETFs, do not sell any physical at those prices. You might be smart to sell a small portion on an ETF, but with the intention that there might be a pullback or to move into another area. But do not sell any physical at $50 or $75. That's too cheap.